A very good day to all of you. Today we'll be revising IND AS 41 Agriculture. The objective of this video series is to give you a pilot view of the entire standard in the least time possible. And for this purpose, we have divided the various principles covered in standards as different concepts. So without any further delay, let's get into the revision. So the first thing that you need to understand in the standard IND AS 41 Agriculture is why did this standard come into place? Why did this standard come into place? Right? Because we already have two existing standards for tangible assets, that is IND AS 16, which is for PPE, right? And we have IND AS 2 for inventories. So when there are already two existing standards dedicated for tangible assets, why was there a need to bring a separate standard for agriculture? The answer to this question is also very, very simple. It is because of the unique nature of items that are covered under this standard. Let me give you a simple example. This standard covers biological assets, which we'll be studying in detail. So let me give you a small example of biological asset. Let's take a cow. Now let's compare this cow with a plant and machinery, which is covered under IND AS 16, right? Which is covered under IND AS 16 as PP. Now, if you see, one of the unique features of this biological asset cow is that in order to giving agricultural produce, that is, let's suppose milk, it also does one more important activity, that is reproduce. It also reproduces, which this tangible asset under IND AS 16 is not capable of doing, right? A plant and machinery cannot reproduce itself. A building cannot reproduce itself. So because of this unique nature of tangible assets there was a need to bring a separate standard for agriculture, right? I hope the answer to this question is very, very clear. So now with that note, let's get into the concept number 1, which is the applicability of the standard. So the standard says that this shall be applied to account for the following when they relate to an agricultural activity. So it is going to be used for accounting the following only when they relate to what? Agricultural activity, right? Let's see what is the first one. It says biological assets other than bearer plants relating to agricultural activity. Biological assets other than bearer plants, right? Now, what are biological assets? Let me give you a quick definition chart for this. So basically, biological assets are all living plants, and animals. Are all living plants and animals. Right? Now, this living plants has two categories. One are the bearer plants and one are the non-bearer plants. Now, as you all have already covered in the 16, you know that bearer plants are treated under IND AS 16, right? So, IND AS 41, when I say biological asset, that applies only to non-bearer plants and animals. That applies only to non-bearer plants and animals, right? I hope that is very clear. So if any biological asset other than bearer plants are being used in agricultural activity, then which standard will apply for them? For them, IND AS 41 will apply, right? Similarly, agricultural produce at the time of harvest. Here, very important is at the time of harvest. Any agricultural produce at the time of harvest, which standard will apply? IND AS 41 will apply. It's because after you harvest it, it turns into your inventory, and which standard will apply? IND AS 2. So mangoes, while you pluck them, right, they are an agricultural produce, and what will apply? While you're plucking them, what will apply? IND AS 41 agricultural produce will apply. Once they are plucked, once you package them, right, that time they turn into your inventory, and which standard will apply? IND AS 2 will apply. So for agricultural produce at the time of harvest, IND AS 41 will apply. Similarly, government grants relating to agricultural activities. Generally, government grants are covered under IND AS 20, right? But if the government grant is relating to an agricultural activity, then it will be covered under IND AS 41 itself, right? So applicability of the standard is that the standard says that it is applicable to any one of these three if they are related to agricultural activity. What are they? First being biological assets other than bearer plants which are relating to agricultural activity. Second is agricultural produce at the time of harvest, which is relating to agricultural activity, and government grants relating to agricultural activity, right? So I hope the applicability of the standard is very much clear. Now, with that note, let's move on to the concept number 2, which is the non-applicability. The IND AS 41 agriculture does not apply to the following. First, it says land which is relating to agricultural activity. Land that is relating to agricultural activity, what will not apply? IND AS 41 will not apply. Which standard applies to land? IND AS 16 PPE will apply. IND AS 16 PPE will apply. Similarly, bearer plants I have already discussed, right? In biological assets, they are living plants and animals, and living plants have two bifurcations, bearer and non-bearer. Bearer comes under 16. We have already discussed this, right? Bearer comes under 16. So that also will not be covered under IND AS 41. Similarly, the third one, intangible assets which are associated with agricultural activities will also not be covered under IND AS 41. There's an exclusive standard for intangible assets, IND AS 38, and these will be covered under that. Similarly, the fourth category, government grants which are related to agricultural activity. Government grants and the fourth one is government grants which are related to bearer plants. Government grants which are related to bearer plants, for that what will not apply? IND AS 41 will not apply. IND AS 20 will apply. IND AS 41 will apply only to government grants which are related to agricultural activity. But if the government grant is given in order of some bearer plants, then what will not apply? IND AS 41 will not apply. It will be covered under IND AS 20 itself, right? Now comes the note. Okay, the note is the thing that we have discussed already, that if there's an agricultural produce that are subsequently processed after being harvested, because I told you up to the point of harvest, what will apply? IND AS 41 will apply. But after you have harvested it, there's some processing happening to that. Then it will turn into an inventory. And what will apply? IND AS 2 will apply. Then what will apply? IND AS 2 will apply, right? So that is the next thing. Next, concept number 3, we have to discuss, which is the definition of an agricultural activity, right? I told you that all the 3 conditions that it says biological assets relating to agricultural activity, right? Then it says that it should be an agricultural produce that should also be related to agricultural activity. Government grant that should also be related to agricultural activity. So at this point, it becomes very much important to understand what is an agricultural activity. What is an agricultural activity? So basically, agricultural activity refers to the management. Agricultural activity refers to the management of the biological transformation. Biological transformation. Now, what and all comes under biological transformation? Growth is a biological transformation. What do you mean by growth? Either it is increasing in quantity, or the quality is improving of that particular biological asset. Either the quantity is increasing or the quality is improving, then you call it growth. So either you are in the process of the biological transformation in the form of growth, or in the form of degeneration. In the form of degeneration. What do you mean by degeneration? See, generation and degeneration, it's a negative term, right? So degeneration means what? Decrease in the quantity or deterioration in the quality. Decrease in the quantity, or there is a deteriorating quality, right? So that is degeneration. Third is in the production. Production is nothing but agricultural produce, right? If there's a mango tree, then mangoes are the agricultural produce. So in either the production, or fourth, the procreation. Or what is fourth? The procreation. What do you mean by procreation? Creation of additional living plants or animals. Additional living plants or animals. So either you are in the management of biological transformation. What do you mean by biological transformation? It can be either growth, it can be either degeneration, it can be either production, or it can be procreation, right? You are either in the management of biological transformation along with the harvest of the biological asset, and you're doing why all of this activity is being done by you? Either you're doing it for sale, or for converting it into an agricultural produce, or for converting that into a biological asset, right? So basically, what do you mean by agricultural activity? It refers to the management of biological transformation, and biological transformation covers what? Growth, degeneration, production, or procreation, and you are harvesting that particular biological asset for any one of these purposes. Either you want to sell it for sale, or either converting it into an agricultural produce, or you want to convert it into additional biological assets, right? If you're doing any one of this, then it is counted as agricultural activity. All of these are counted as agricultural activity, right? I hope the definition is very, very clear. So only when any of these three relates to an agricultural activity, only when the biological asset relates to agricultural activity, only when the agricultural produce relates to agricultural activity, and only when the government grants relates to agricultural activity, it will be covered under IND AS 41 agriculture, right? So I hope the first three concepts very clearly makes you understand what is going to be covered in the standard first of all, right? Once that is clear, let's move to the concept number 4, which is recognition of agricultural produce or biological asset. When will you recognize this agricultural produce? When will you bring that into your books? The standard says that on the fulfillment of three conditions, you will recognize this agricultural produce and biological assets in your book. What are the three conditions? First, you should have a legal ownership. There should be control. There should be legal ownership over that biological asset or agricultural produce. Second point, as I always tell, there should be a probable future economic benefit that you should be arriving from that particular biological asset or agricultural produce. First point is what? There should be a control. I should have a legal ownership over that particular biological asset or agricultural produce. Second, it says that there should be a probable future economic benefit that should flow to the entity from that particular biological asset or agricultural produce. And third, it says that the fair value or the cost should be reliably measured. The fair value or the cost should be reliably measured. If your agricultural produce or biological asset satisfies all these three conditions, then it is eligible of being recognized in your books. Then it becomes eligible of being recognized in your books, right? So first we saw the definition of agriculture, right? Agricultural, what is covered under the standard. Next we saw what and all are not covered in the standard. Then we understood the definition of agricultural activity and now the recognition principle, right? Once your agricultural produce or biological asset has satisfies this recognition criteria, we will measure that in our books. The initial measurement will take place. Now, the initial measurement of biological assets and agricultural produce. Now, let's look at the initial measurement of biological asset. Initial recognition of biological asset. It says, the standard says that in case you are able to determine the fair value, then your biological asset will be recorded in fair value less cost to sell. Then your biological asset will be recorded in fair value less cost to sell, right? But in case you are unable to determine the fair value, then your particular biological asset will be recorded in cost, right? Which is cost less accumulated depreciation less accumulated impairment loss, right? So in case first preference is given to what? Fair value. In case you are able to determine the fair value, then fair value less cost to sell. But if you are not able to determine the fair value, then you will record it at cost. Next comes the initial recognition of agricultural produce. Now, the initial recognition of agricultural produce can only happen at fair value less cost to sell. It can only happen at fair value less cost to sell. Here, there is no concept of you are not able to determine the fair value because agricultural produce is itself, it is generated with an intention to sell it in the market. So it is not at all possible that you cannot arrive at its fair value. So here the concept of not able to determine the fair value, go for cost does not exist. Why? Because agricultural produce are developed with an intention that it should be sold in the market. So you will, however, be able to determine the fair value of it. So it will always be recorded in fair value less cost to sell, right? Next comes the subsequent measurement of biological assets and agricultural produce. Now, subsequent recognition of biological assets, if it was initially recorded at fair value, then even now you will record it at fair value less cost to sell. If initially it was recorded at fair value, now also you will be recording it at fair value less cost to sell. But initially you were not able to determine the fair value, hence you went to the cost model. Hence you use the cost model to recognize that. In that case, you check whether now the fair value can be determined. If yes, the fair value can be determined, then the asset will be recorded, recognized in fair value less cost to sell. But even now, if you are unable to determine the fair value of that biological asset, then it will be recorded in cost less accumulated depreciation less accumulated impairment loss. Okay, but the subsequent recognition of agricultural produce is an area where you need to be very, very careful. Why? Because I told you only till the time of harvest of agricultural produce, what will apply? In the S41 will apply. Once you harvest the agricultural produce, then it is further being processed and packaged and all. Then it will move to which standard? It will move to in the S2 inventories. It will move to in the S2 inventories will apply for them for subsequent recognition, right? Now, an important note is here that the fair value less cost to sell, right, can change due to both reasons. It can change due to the physical change that is happening in that biological asset, or the price change that is happening in the market, right? I hope it's clear. So the initial recognition will always happen at fair value less cost to sell. For biological asset, if you're not able to determine the fair value, you can go for a cost model. In agricultural produce, the concept of cost does not exist. You will only record it at fair value less cost to sell. Going to the subsequent recognition, in subsequent recognition of biological asset, in case it was initially recognized as fair value less cost to sell, now also you will recognize it at fair value less cost to sell. If initially it was recognized at cost, see whether now you are able to determine the fair value. If yes, record it at fair value less cost to sell. If you are not able to determine, then record it at cost less, accumulated depreciation less, accumulated impairment loss. And for agricultural produce, subsequent recognition will happen under which standard? In the S2 inventories it will happen, because only only till the point of harvest, which will apply in the S41 will apply. Now, some of the disclosure requirements for the standard are, you need to, in the notes, you need to disclose the description of the biological assets and the activities that are being carried out, the gains and losses that you have recognized during the period out of this agricultural activities, reconciliation of any changes that happens in this biological asset, additional disclosure when the fair value cannot be measured reliably. We discussed, right? When you're recording at cost, you're not able to find out the fair value reliably. So then you need to have additional disclosure, and in case there are some government grants given for agricultural activity, you need to disclose that as well, right? Now, moving on to concept number 8. Concept number 8, it's a relatively very small standard. So this is concept number 8 is basically the last concept, which is government grant related to agricultural activity. Now, if government grant has been given relating to agricultural activity, we discussed in the applicability itself that it will be covered under IND AS 41 and not under IND AS 20, right? So the first thing you need to look is whether the biological asset is measured at fair value less cost to sell, or whether it is measured at cost. Whether it is measured at fair value less cost to sell, or whether it is measured at cost. If it is measured at fair value less cost to sell, the second thing that you have to check is whether it's an unconditional grant or it's a conditional grant. Whether it is an unconditional grant or if it is a conditional grant. So in government grants, the first thing that we need to see is if a government grant is being received for an agricultural activity, whether the biological asset is being measured at cost or at fair value less cost to sell, right? If it is measured at fair value at cost to sell, then you need to check whether it's an unconditional grant or a conditional grant. Unconditional grant means the government has given you a grant, but they have said that use this money for whatever you want. They have not specified any use, that this needs to use for this purpose, or they have not placed any condition, right? So in that case, in case your grant is unconditional, there's no conditions attached to that, in that case, you will recognize the particular grant in your P&L when it becomes receivable. When it becomes receivable, you will recognize that in your P&L. But if your government grant is conditional, that is, there are some conditions that come, you need to fulfill certain certain criteria needs to be fulfilled, or the government says that this activity needs to be done in the next 5 years. There's some condition being attached to that particular grant. In that case, you need to see whether on breach of such condition, is the amount going to be refunded fully or the amount is going to be refunded proportionately. In case it's a conditional grant, you need to check whether in case of breach of that condition, is the amount to be refunded fully, or is the amount to be refunded proportionately. If the amount is to be refunded fully, the full grant has to be refunded. In that case, you will recognize this particular grant as a liability, because in that, let's say the grant says that within 5 years you need to fulfill this condition. So within 5 years, there's possibility at any point there can be a breach. So it is actually right now, what is it my? It is my liability. So you will record it in your books as your liability. And when that condition is being fulfilled, this particular grant can be taken to your P&L. This particular grant can be taken to your P&L because at 5 years period, there is point of breach at any time. This point of breach at any time. So for that 5 years until the fulfillment of the condition, it will be treated as a liability. And once the condition is being fulfilled, you can take that to P&L. But if it is a conditional grant and the refund in case of breach is only proportionate, it happens on a proportionate basis. Let's say the government grant says is given for 5 years, and they say within the 5 years, if at any point the breach is being done, then for that period you will do the refund. So in case there's a government grant that is being given and in case of breach, the refund happens proportionately, then the standard says, then the government grant should be deferred and taken to P&L also proportionately. It should be deferred and taken to the P&L also proportionately, because let's suppose the government grant says in 5 years, you have to plant, let's say 10,000 trees each year. Okay, that is why the government gave you that particular grant. Okay, now in case you breach this condition in the 4th year, then the government grant was given for how many years? 5 years. 4 years you fulfill the condition, and in the 5th year you have breached. So the government says, then for that 1 year, what is the proportionate amount? Let's say the government gave you 5 CR. So proportionately, if you divide, it is 4 CR for 4 years. And for the 5th year, it is 1 CR. So you have to only refund how much? 1 CR. So the refund will happen on proportionate basis. In that case, what will happen? This government grant will be deferred over that period, and proportionately you will be taking it to the P&L. So 4 crores will be taken to the P&L, right? Because it was already the condition has been fulfilled. So you will defer the payment, and for this 1 crore, you will be doing the refund, right? So it says that in case there's a refund that needs to be done, if the refund is proportionate, then defer the payment over the years and or take it to the P&L as and when that condition is being satisfied. That is proportionately. I hope it is understood, right? And in case your biological asset was measured at cost, in case it was measured at cost, then what will happen? IND AS 20 will apply. So this entire concept will only apply if your biological asset was measured at fair value less cost to sell. Only when fair value less cost to sell it is measured, you will see whether it was conditional or unconditional. If it is unconditional, then you will recognize it in the P&L when it becomes receivable. If it is conditional, you will check whether the refund in case of breach is full or the refund in case of breach is proportional. If the refund in case of breach is full, then you will recognize initially as liability, and after the fulfillment of that condition, it will be taken to P&L. But if the refund is proportional, then it will be deferred, and proportionately you will take the amount to the P&L. And if it is measured at cost, then what will apply? IND AS 20 will apply. IND AS 20 government grants will apply, right? So these are all the concepts that you need to know in IND AS 41 agriculture, right? It's a relatively very small standard. As I told you, once you cover the standard IND AS 16 full-fledged, then the subsequent standard 40 and 41, more or less the principles also get repeated, and they are pretty much smaller, right? I hope you found this revision useful. You can download this particular chart notes from the description as well. Thank you so much.